Welcome back, everyone. One of my favorite guests joins me right now. Fascinating fellow, Martin Sorrell. In case you don't know him,
you should be Martin. In the advertising.
There we go. I could do the advertising. He's CEO of WPP, the largest advertising firm on the planet. But I'm always interested over the years, some of the trends you saw in the mid-1990s, this whole internet sensation that people were poo-pooing. You said it was going to change everything. That was before Al Gore. But on Davos, in Davos of all places, when a lot of your colleagues out there were expressing disdain and shock at Donald Trump, and you had looked at Hillary Clinton and liked her, but you said, we're out of touch with reality because of this Davos bubble. I'm paraphrasing here. But
and the Brexit bubble.
And the Brexit bubble as well.
We were talking to ourselves,
And you had wanted England to stay in the Union, and then you had thought Hillary Clinton would win,
so I was 0 for 2 strikes.
But you've also had some other good hits here. But how was that received? I always wondered when you would come back, how that was received.
To be fair, the people in Davos, I think, probably agreed. I mean, how could you not agree? Because about a year previously, everybody was saying, you know, the UK...
Weren't they all aghast out there?
Well, they were surprised by the result, but I think when they looked at their navels and they started to analyze what was going on, they understood that they were looking at the wrong data, taking the wrong opinions, and talking to themselves in that bubble, you know, whether it be the London bubble in the UK instead of the North or the West or the East or the South, whether it was the bubble, you know, East Coast and West Coast, and forgetting that, you know, the heart of America is in the middle. What some people describe as the flyover country, unsatisfactorily. So I think.
But now, when it comes to Brexit, you're in the tourist. Make it quick, make it fast, right?
Well, yes, I'm soft and fast. I was asked whether it should be, you know, sort of hard or soft, or slow or fast, and I said fast and soft, I guess, was my solution. But it's going to be a very difficult.
But don't drag it out, in other words.
No, because uncertainty is the enemy of investment or of any growth. And you know, the biggest. If you said to me, what is the biggest thing we see at the moment? It's the uncertainties. I mean, this morning's press conference, at one level, obviously, Israel and U.S. relationships are very strong as a result of the new administration, the emphasis by the new administration. But you know, how much uncertainty will be removed in the medium to long term is the key issue. And you see lots of uncertainty. You see technological risk. You see, you know, activists, you know, Trian this morning taking a stake in Procter & Gamble. I mean, a massive company, 220 billion of market cap, whatever it is, and then taking a significant, not big in the overall context, 1.5% or whatever it is, but significant in terms of sums of money, $3.5 billion. So you have that uncertainty of activists, and then you have the zero-based budget movement, if you can call it that.
Where does Trump fit into this? I mean, as that,
well, it's
an advertiser. Is he mixing messages? Does he risk? You know, the media described it as a chaotic start. I don't know if it's entirely fair, but what do you think of that?
Well, to be fair, most regimes, when they start, have bumps, and it's bumpy. You have to appoint a large number of people. Some people work out, some people don't. So we have to see how it plays out long term. But the interesting question about how does the Trump administration figure, let's say, short-term, medium-term U.S. economy, I think it's positive, because we heard again this morning there's going to be a very significant tax reduction. You know, the biggest deal that has ever been seen.
Ever.
And that has got to be good for business, at least in the short to medium term. It may be that after 2 or 3 years we'll have an inflationary boom and there'll be a check. But I think for the U.S., if you asked me, again, you go back to Davos, what people ask, what do you see? In the U.S., what we'll gain on the U.S. swings. We might lose a little bit on the international roundabouts, because some of the things that are happening internationally, the uncertainty, whether it be China, whether it be Mexico, whether it be what will happen in the Middle East, probably don't diminish the uncertainty. So I would be pretty bullish for the U.S. economy in the next 2 to 3 years, because I think of infrastructure spending, I think of reduction in tax rates, deregulating the economy.
Is there any spread over effect for the world on that?
Well, there will be, because you know the U.S. economy is what, 17 trillion out of 72 trillion. So by definition, it's the biggest engine. So if the biggest engine is, you know, going at a very rapid rate, I mean,
Are you concerned we might be driving ourselves into more debt doing this?
Well, you're up to 20 trillion, and people are concerned about that. And there's also the inflationary impact. You'll have that in the UK too. I mean, the UK, to be fair, again, we're out, or we're coming out so they say, the UK economy has been remarkably resilient so far. There are those that say in 2018, 2019, the position might be different. And remember, we have a 2-year negotiation process, which is, when I said fast and soft, what I was getting at was really it's 2 years of uncertainty. And at the end of the 2 years, if we have to extend the process, we need 20 out of the 27 member states approving an extension of the negotiation period. So
that doesn't sound fair.
Doesn't sound, yeah, and it doesn't sound as though we'll be able to get an extension. No. So it may be that we have to, revert to WTO rules in 2 years' time, which is going to be tough.
World Trade Organization rules.
Yeah.